Before you go out and invest in gold, you're going to want to watch this. What's up, guys? My name is Darrell, here to talk about all things finance. Hey, do me a favor, if you like this video, drop a like below and feel free to subscribe. With that being said, let's talk about gold. Peter Mallick is the president and CEO of Creative Planning, which is a wealth advisory firm that operates in all 50 states and has about $210 billion in assets under management. Needless to say, he knows a thing or two about money. On episode 356 of the Tim Ferriss show, he revealed his thoughts on gold and why he's not really a fan. And I have to say, he makes some pretty good points. The first is gold doesn't provide any income. When you buy a rental property, you want to collect rents from that. When you buy a bond, you want to collect the yield or the coupon. And when you buy a stock, you want to either collect the dividend or you want to reap the benefits of those earnings in the form of appreciation. Gold doesn't have any of that. The only real value that gold has is that someone will pay you more for it in the future. Warren Buffett has a pretty funny quote doubling down on this, saying, "Gold gets dug up out of the ground in Africa or someplace. Then we melt it down, dig another hole, bury it again, and pay people to stand around guarding it. It has no utility. Anyone watching from Mars would be scratching their heads." And if you didn't already know, Warren Buffett also is not a big fan of gold. Next is performance. Going all the way back to the Great Depression, gold has underperformed almost every major asset class, including stocks, bonds, international stocks, REITs, you name it. And although past performance is not indicative of future results, it's definitely still something to consider. Next is volatility. Not only has gold underperformed other major asset classes, but it's also more volatile. Now I want to make something very clear. Volatility does not equal risk. Risk is the permanent loss of capital. But when you invest in gold, you're taking on more volatility risk without getting the reward. And lastly, everybody's favorite thing, taxes. Whether you buy a gold bar from Costco or an ETF like GLD, you're going to end up paying more in taxes when you go to sell that than you would if you were to buy and sell Apple stock, because the IRS considers gold collectible. Collectibles are subject to a higher long-term capital gains tax of 28%, where stocks are capped at 20%. Even if you do end up making a modest gain from buying and selling gold, you're going to end up paying more taxes than if you would have just bought and sold stock. Personally, I don't own any gold myself. I think there are better opportunities out there for me given my goals, risk tolerance, and time horizon. But whether you decide to invest in gold or allocate a portion of your portfolio to it is completely up to you. These are just some things to consider. Do you own gold? Are you planning on buying any gold? Let me know in the comments below.